Hello, everyone, and thank you for joining today's webinar titled How to Avoid the Five Most Common Money Mistakes. You can save big by doing very little and sometimes nothing. If you have not had the opportunity yet, if you could please go to the handout section and grab the resources we have there for you in the handouts section. It would be greatly appreciated. You can either download it or you can print those items out for your use. And again, welcome to How to Avoid the Five Most Common Money Mistakes. Now, I know this might sound a little like a sketchy infomercial, but it's true. You can save money every month by literally doing nothing. We'll show you how today using tactics that we've seen work for millions of Americans. We are not making this up. That number is the reason we're talking about this today. All of us taken together owe a whopping $83 billion on our credit cards. When numbers get this large, it's hard to even understand them. So, how much is $83 billion? It's enough to give everyone living in our two most populous states $1,000 in cash. That's everyone living in California and Texas. And of course, we keep charging more on our credit cards. So soon we'll be able to add the next biggest state, which is Florida. Did you know more than half of all credit card holders carry a balance each month? And did you know that credit card interest rates are hovering around 20%? That means many people are paying $1 in interest for every $5 they charge. So it's very hard to catch up once you fall behind. That's why credit cards can be so dangerous. And it's why we're going to mention them a lot today. In fact, before we talk about saving money by doing nothing, let's talk about spending just a few minutes to save money on those hefty credit card interest rates and fees. That's right, we haven't even mentioned that the average late fee on a credit card payment is $36 a month. That can really add up, but you can easily get rid of it. How? By asking. If you've had a credit card for many years and you've been a good customer, you can call the number on the back of the card and get some concessions. For example, you might be able to shave down your interest rate if you mention another card has offered you less. And in 5 minutes online, you can surely find one. Then mention the new card and lower rate to the representative. If you've never been late before, you can often get the first late fee removed as a gesture of goodwill. You can also move your due date so it corresponds better with your paychecks, so you never get caught short and need to float that balance a little longer. In fact, we just mentioned the first money mistake we see many people make. They simply fail to ask to pay less or save more. And that's not only with credit card, it applies to many of the companies and institutions you might owe money to. Besides your credit card specifics, you can also call about any debt you've incurred for medical procedures. We're not talking just hospital bills and doctor's fees. Even dental work and lab fees can be negotiated. Medical providers are well accustomed to such negotiations. Just contact the billing department and politely inform them you can't afford to pay the full bill right now, but you're a responsible person. What breaks can you offer? Remember, be polite. This works especially well with debt collectors. No one likes dealing with debt collectors, but here's the behind the scenes truth that can help you save. Debt collectors often buy debt from, say, your doctor. They pay pennies on the dollar. The doctor gets something when he might fear he'd get nothing, and the debt collector then goes after you, making a profit when you pay in full. Therefore, many debt collectors will accept less than the full amount because they still profit on the transaction. So if you're facing a debt collector, always negotiate. We can show you how. We have a booklet that gives you step by step instructions. Before we leave the topic of negotiating, let's wrap up with this. You can negotiate almost any service. That goes for your cable or satellite bill. You can often get extra premium channels if your provider is running a special, say, you didn't know about. You can even negotiate for a lower bill, often saving $5 or more per month. The same tactic works for your complex mobile phone contracts. If you still get a newspaper delivered, you can either get a small price break or an extra day delivered for free. Why do these businesses cut you these breaks? Because they want to keep your business. And these little savings, they really add up, especially when you don't have to do anything. Now, on to the second biggest money mistake. If not asking was the first one, then not embracing technology is a close second. What do we mean by this? Simple. There are big advancements that make it easier for you to save money, but not everyone has adopted them. Sometimes it's out of fear, but mostly it's just because people don't know about them. So let's allay your fears and fill you in. Let's be honest, budgeting isn't fun. We all know it's important. After all, how can you save money if you don't know how much you're spending? That's why a monthly household budget is so important. But it can also be time consuming to put pen to paper. But what if you didn't have to? There are websites, apps, and programs that handle the drudgery of budgeting for you. They do the math for you and in seconds instead of hours. Many of them cost nothing, and the ones that do cost, they cost only a few dollars. Here's how they work. One of the most popular is called Mint, and another is called Personal Capital. But a lot of banks and credit unions offer similar programs on their websites for their customers. Basically, you just type in your income and expenses, and these programs do the math for you. You can even project your savings if you eat one less takeout dinner or if you say refinance your mortgage. The software does the heavy lifting for you. If this is a little too techy for you, there's a middle step. Websites like Tiller let you download customized spreadsheets that stay on your computer and you can easily personalize them. Quicken has software that's been around for decades, and most of us are familiar with it. Each solution has its pros and cons, but they all work. So it's really up to what makes you feel the most comfortable. The last place you might look for easy savings is your workplace. Believe it or not, your employer can help you effortlessly save money even as you work hard to make it. There are three major ways to do that. More than 9 in 10 Americans are paid through direct deposit, and almost all of them have access to a neat feature. You can direct some of that money away from your checking account. You can send it directly to a savings account you don't normally see. Imagine if you send even $10 a week to a savings account. At the end of the year, you have more than $500, and you literally spent a few minutes setting it up, then did nothing the rest of the year. This savings shortcut works very well when you get a raise. Just divert that extra money into a savings account. You won't be tempted to spend it because you never got used to having it and you don't constantly see it in your checking account. To set up multiple direct deposit streams, simply talk to your human resources or payroll department. They can walk you through this easy process. Where you work might offer valuable services that can save you big. One of the most popular is a 401k, which helps you save for retirement. What's so special about a 401k? Many employers match a portion of your contribution to this retirement account. According to government research, the average is 4.3%. That means for every dollar you sock away for later, you get 43 cents. Doesn't sound like much, but when you consider a savings account is paying less than 1% in interest, that's suddenly a lot. Also, the IRS gives you some money too by not taxing what you contribute. And since this is for your retirement, which is a long ways off, those savings will build up over time. Another big workplace benefit is called a health savings account or HSA. It does the same thing by letting you set aside money for health care and having it be invisible to the IRS. Now, we could spend an entire webinar talking about these lucrative benefits, but we suggest that you chat it up with your HR department. Believe it or not, they want you to take their money. Why? Because companies that offer these benefits know their employees will appreciate them. They're more likely to stick around and work hard. So let your bosses help you save. We've already talked about automating your savings. Now let's talk about automating your spending. Almost every bank and credit union and even many municipal utilities offer automatic bill pay. You can go online and set the date each month you want a bill to be paid. On that day, the proper amount is automatically deducted from your bank account right then and not one day sooner, or more important, not one day later. That means never paying a late fee ever again. Of course, now, a danger of automatic bill pay is that if you blow your budget on some debit card purchases you've forgotten, you might not notice how low your bank balance is getting. Then your bank or credit union might hit you with fees, either for not keeping a minimum balance or for actually overdrawing your account. That's why it is so important to keep a household budget. Another worry about auto pay. You might set a bill to be paid and never look at it again. What if it's for a subscription you no longer need or a music streaming service you no longer use? Of course, if you keep that household budget using the easy tech we talked about earlier, you won't have any of these downsides. It'll be all upside. The final big money mistake is actually caused by our desire for easy money. While we've just reviewed some proven ways to save more without having to burn a lot of calories, there are also a lot of scams that prey on your urge to find shortcuts. The difference is you don't know these people, yet they want you to trust them. Generally speaking, there are two kinds of scams. One appeals to your greed, the other to your fear. If you find yourself talking to someone you don't know and you feel one of these emotions welling up inside you, pause for a moment and consider whether it's a scam. Let's run through an example or two. Let's talk about easy money. The stereotype for these scams is the Nigerian prince who wants to give you thousands of dollars to help him transport money out of his country. But these also include scammers posing as VA managers and calling military veterans to offer extra benefits, or an IRS agent trying to give you a tax refund you didn't know you had coming, or even a government official saying they've located some funds for you that were lost. In all these cases, what the scammers are after is your personal information. They can either use that to break into your accounts and drain them, or they can sell your personal information to other scammers who would do the same thing. Ironically, these scams can be from the same alleged sources. The IRS agent who wants to give you that refund, well, now he's calling to threaten you with prison if you don't pay back taxes right away. Never mind that the IRS never calls you, they only send letters. And never mind that there hasn't been a debtor's prison in this country for 2 centuries. These scams all insist you must act now or you'll suffer severe consequences. Why? Because they know if you take a moment and really think about what they're threatening you with, it doesn't make a whole lot of sense. How, for example, can a bill collector order the police to arrest you if you don't wire the balance you owe? Mm. Since when do police officers take orders from debt collectors? So, how do you avoid both kinds of scams? Simple. By doing exactly what we've been talking about so far, almost nothing. You need to resist the urge to act now. Ask for the name and title of the person calling you. Ask for a phone number to call them back. They won't give you one. But on the off chance they do, look it up and see if it's even from the place they say they're calling from. Usually they'll just hang up on you. And of course, never reply to emails from people you don't know. If you want, Google them and look for the legitimate company's website and contact them that way. But again, doing nothing at all is your safest bet. Now, let's talk for a moment about a topic no one likes, and again, that's debt collectors. Who likes people calling them all the time and asking them to pay bills they can't afford to pay right now? Show of hands. Of course, I can't see any of you, but I just know that no one has their hand up. Here's the thing about debt collectors. They can't just bother you any time of the day, and they're not allowed to threaten you at any time. That's important to know, and it's important to let them know that you know. There's a federal law called the Fair Debt Collection Practice Act, or FDCPA. The FDCPA bans debt collectors from being abusive. For instance, it says they can't call you before 8 in the morning and after 9 at night. They can't call you at work if you tell them not to. They're not even allowed to swear at you. If you're getting harassing calls from debt collectors, just Google the letters FDCPA and you'll get a list of your rights. Then tell those debt collectors you know about your rights and how to report them to the federal authorities. That usually settles them down very quickly. Before we leave today, we want to add one bonus mistake that many people make. This one costs them not only money but a lot of time. It's not asking for professional financial help. Now, this might sound self-serving since I work for just one of those places, but it also happens to be true. You can save both time and money by calling a nonprofit credit counseling agency like Consolidated Credit. Here's what happens when you do. When you call a certified credit counselor, you receive a free debt analysis. They're trained to ask you the right questions and study your financial strengths and weaknesses. From here, they can recommend ways for you to spend less and save more. They can also offer you a powerful tool that you can't use on your own. It's called a debt management program. A debt management program, or DMP for short, is basically an agreement between you and your credit card company. They'll freeze your penalty fees and lower your interest rate if you agree to make regular payments. Those payments go through the credit counseling agency, and you can make one payment that covers any credit cards you put under the DMP. So you pay less and save time too. So what's the catch? DMPs aren't free. It costs money for staff to administer them. But, and this is a huge but, that fee is rolled into your monthly payments and is minuscule next to the savings you'll reap. That's probably why DMPs have been around for decades and they've saved Americans millions of dollars. But you can't just sign up for a DMP on your own. The credit card companies work exclusively with nonprofit credit counseling agencies. If you want to know more about DMPs or anything else we've talked about today, simply give us a call or send us an email. We hope the few minutes you've spent with us today will save you many more minutes later on. And of course, we hope you'll save a lot of money too. Thanks again for spending time with us today. Also, please take the opportunity, should you have any questions, you can call us 1-800-210-3481, or you may contact us at fined@consolidatedcredit.org. Also, please take the time to use the QR code that's located on your slide on your screen that will give you access to many of our self-help booklets. Thank you all for joining the webinar today, and make the rest of your day the best of your day. Thank you so much for joining.